Hello and welcome to Portfolio Watch. I'm Gugulethu Mfuphi, and in today's program, sustainable investing is fast becoming a mega trend that cannot be ignored. It seeks to drive a positive social or environmental impact alongside solid financial results. Acronyms used by investors can be very confusing. SRI, for example, has had various connotations since the 1970s, and there are many data providers that serve ESG scoring for listed companies, but sometimes being qualitative as opposed to quantitative, which can muddy the waters a bit, leaving it open to interpretation. However, companies are improving their disclosures around their relevant E, S and G factors. A full program ahead today as we unpack sustainable investing. To join me in studio, I'm joined by my guest, Andrew Dittberner, Chief Investment Officer at Private Client Securities for Old Mutual Wealth, and Aileen Campbell, Chief Investment Officer at Adviceworx. Lady and gent, a great pleasure to have you both with us this evening. Sustainable investing, let's actually start there, because sometimes the waters can really be muddied as to what this is exactly. Andrew, let's start off with you by getting your perspective on sustainable investing and its connotations.
Yeah, so I think it's a fairly new, specifically in South Africa. I think it's a very exciting area of investing that hasn't been around for a very long time, or people haven't really spoken about it for a very long time. Now it's becoming much more important, and we've seen it. When we look at millennials, for instance, that are becoming very concerned about the environment in the future and making an impact from an investment point of view. So typically, when you think of investing, you're thinking of financial returns, profitability, etc. And you don't necessarily always think about the impacts that your investments may have on society, on the environment, etc. So whilst millennials are a big driver in this space, we're also seeing high net worth individuals at the moment, that are also concerned about, where their money is going. Is it going to, sustainable, environmentally friendly, society friendly investments? And I think it's a huge theme that is picking up momentum in South Africa in particular. And right now, I don't think, whilst you look at your big asset managers, typically there is an element of sustainability built into their investment process. From a private client point of view, there's no one really leading, the way in this regard, or championing the sustainable investing. And I think it's a wide open space that managers can take advantage of.
Quite a pertinent issue, especially if we look at the times when we had the oil spill with BP in the Gulf of Mexico, and all these other environmental affairs like VW with the gas emissions again. So really topical themes that impact the livelihoods of individuals. But the key question is, how do we measure all of this? It seems a bit confusing, right?
Mm-hmm. Indeed, and I think that's one of the problems with the criteria that's used to evaluate ESG, because they're not standardized and they differ across different product providers and even providers of ESG investments, be it mutual funds or ETFs. They use their own different criteria as well. So the first problem we have as investors when you consider ESG, firstly, the standardization of criteria that is used to evaluate ESG. But I think more importantly for me is the verification. Who's going out and actually verifying that this data is true? So for example, with Volkswagen, just prior to their emissions crisis, they actually ranked very well on an ESG scorecard because nobody had gone back to really test the CO2 emissions in their cars. So we've got difficulties around standardization, we've got difficulties around the verification, but also philosophically, what might be ethical to me might not be ethical to you. Yeah, so for example, in a lot of the ESG indices that I've looked at, we often find tobacco companies in there. And you might find, well, a tobacco company is a morally questionable investment because of the impact that it has on your health. So you would say, well, I don't want any British American tobacco, for example, in my index. But I might think, well, if we look at the evolution in British American tobacco, they've created vape technology, heat not burn technology, which might be less harmful to you. I might think, well, it's a less morally questionable company, so I'm comfortable to have it in there. So what's morally okay to me may not be to you. So it creates a lot of subjectivity when it comes to this kind of investing.
It does. How do you deal with it from an Old Mutual point of view, especially from a governance issue and standpoint, where in South Africa, solid and good corporate governance has also come into question if we take a look at large companies like Steinhoff as well? Yeah,
so I think what Aileen touched on, was your socially responsible investing aspect of it. Where you might negative screen out some companies. For instance, she spoke about tobacco companies, it might be beverage companies, gambling, whatever it might be, things that are seen in society as morally unethical, if you want to look at it that way. From our point of view, you may also be guided from the investor, the end investor, given that we're building private client portfolios and it's not a fund solution. An investor might come to us and say he wants X, Y, or Z, or he might want to negative screen something out, as the examples that have just been given. Alternatively, you might say, I want to make an impact with my investing or my investment. So I want to invest in a specific, industry, be it education maybe, or specific theme rather. An educational theme or a healthcare theme or something that plays to the ecosystem, for instance. So you can have that impact investing. So some clients might not be worried about their returns. They might not be worried about market-related returns. More importantly, they're worried about their investments making an impact. Others might say they're still concerned about their returns. They want market-related returns, but at the same time, they don't want to make any harm to society or the environment. And then maybe you use a negative screen and you screen out companies, where it might be, a coal business, a coal mining business, for instance, is another example. So I think, from our side, we would take our guidance from the end client.
Yeah. So I think when it comes to selecting an investment in a unit trust or an ETF, you would need to go and look at, well, what methodology do they use to put shares into the portfolio or into the ETF? So Andrew mentioned negative screening. You also get positive screening. So there you would go and select companies that rank high from an ESG perspective. So that's more of a positive screen. Or companies that are best within their specific class would be another way to do that from an ESG perspective. So again, there are lots of ways you can do it, but it's really understanding what is the methodology to select those shares, and also how often are they reviewed and how often are they verified.
Very critical. So balancing not only the numbers to make sure that you get to the most important and valued return on your investment, but of course moral compass and ensuring that there's ongoing investigations and making sure that the standards are maintained. Lots to consider, but of course this takes us to the big question as to which particular stocks should we consider when we put our portfolio together for sustainable investing. Let's talk about some of the companies that you've both highlighted here, and of course using the various scales and definitions and methodologies that are in place. But Advitech is actually one of those that features on your list here, Andrew, as an education group that might actually make a positive one to invest in.
Yeah, absolutely. So Private Client Securities holds Advitech in their domestic core equity portfolio or model portfolio. And from an ESG or rather a sustainable investing point of view, this isn't a negative screening type company. Rather, this is one of the few companies in South Africa that I think you can identify as making a positive impact. When you look globally, there are a huge amount of opportunities if you think about impact investing, but locally there actually aren't that many. So you might introduce an ESG methodology within your overall process, but it's very difficult to have a specific impact-focused investment theme in South Africa. This is one of the few companies, obviously playing to the educational theme. We all know they've got their schools, tertiary education, and then they've also got their recruitment business. So basically from your day one of school right the way through to your first job, Advitech can take care of the whole value chain, if you want to look at it that way.
Very true.
Yeah, and even if you go onto their website, there's a sustainability tab there, and they talk about their school buildings, and what they're doing from a building point of view, ensuring that the environment's taken care of, how they're impacting society in general, etc. So they are very, ESG, environmentally, socially orientated, if you can think of it that way.
Given that they are in the education group, though, does that mean that perhaps all other stocks in the education sector might also be a positive in that play?
So if you're going to look, and this comes back to, what is your end goal?
Sure.
Are you only after impact, or do you want investment returns as well? And then that's when you might start looking at, the different educational companies. So you're obviously, alluding to Curro, for instance.
Yeah.
So you've got Curro and you've got Advitech. Now, which one are you going to invest in? From our perspective, here's Advitech is a company that's been around a long time, is very profitable, returns cash to shareholders. On the other hand, you've got Curro, which is a new up-and-coming business, which is typically taking cash from investors in order to build up their new schools. From an investment point of view, we prefer Advotech that returns cash as opposed to one that's having to raise cash to build new schools. Not to say Advotech aren't building new schools, they are reinvesting a lot of their profits in building and buying new schools and improving their current schools. So they are definitely investing, they just don't need to go to investors to raise that cash. From a valuation point of view, Advotech, I don't think either of them are exceptionally attractive or cheap rather.
True.
I think they're fairly priced, or Advotech's at least fairly priced. You need to pay up for a good business, which Advotech is.
Indeed. Let's talk about another one, and this time Mondi, and many of us are familiar with it from a paper point of view, but I can think way back, perhaps to the late 90s, where they used to have this orange or yellow container to allow people to actually recycle. So seems like they're actually ticking the boxes here, Aileen. Would you agree?
Absolutely. So I think if you think of Mondi, you think it's a paper company.
Yeah.
But we all know what's happened to the demand of paper. If you think of the big move to digitalization, the demand for paper has fallen. So a company like Mondi has really had to reinvent itself, and are some of the global leaders, I suppose, in packaging, for example. So they design and build packaging for industrial use, for medical use. So they've really innovated themselves. And probably an area of the business you're not aware of is plastic film. So if you think of the elasticity in a baby's nappy around the waistband, that plastic film is actually produced by Mondi.
Wow.
So you wouldn't have thought. They've really innovated themselves and to diversify their earnings so they are not as cyclical as we would see with paper production. Headquartered in South Africa, but it's such a global company. They've got operations across South America, the rest of Europe, as well as Asia. Now, from an ESG perspective, you think, commodity-based company probably doesn't score very well on an ESG basis, but actually they do, not only in terms of corporate governance, because they apply the King Code in terms of their corporate governance, which is good principles of corporate governance that talks to your board members and your audit committee, etc. But they also rank well from an environmental perspective, because if you think of a paper mill, just think about the effluent that goes back into your water systems, and if you think of air pollution, etc., deforestation. So they're generally not great businesses when you think of environmental impact. But Mondi has actually done a lot of work to improve and reduce their environmental impact. So for example, some of the initiatives they use is, where do they source wood fiber from? They would never source it from a plantation that had replaced a forest, for example, where people's rights have been infringed upon and have been moved off the land, for example. And they wouldn't use genetically modified trees. They've also said they're trying to reduce their CO2 emissions, so by 15% by 2030 or so, and they're doing a lot of work around water scarcity, which is particularly important in South Africa as we're a water-stressed country. And what they're looking at is, how can we reduce our use of fresh water? How can we reduce our use of portable water and rather use recycled or treated water in our production processes? So I think, this company has made some great strides, and despite what Donald Trump says about climate change, they actually take it very seriously because it impacts their forests, which ultimately impact their profitability.
Indeed. Solid one on Mondi, no doubt,
Absolutely.
and giving us some interesting facts and insights to it. Don't think I'll look at a nappy in the same way. But we'll come back with a few other stocks to highlight regarding sustainable investing here on Portfolio Watch. We'll be back right after this break. We're back, and our topic for today is sustainable investing. Joining me to give us some insight into some stocks you need to consider to put in your portfolio is Andrew Dittberner, Chief Investment Officer for Private Client Securities at Old Mutual Wealth, and Aileen Campbell, Chief Investment Officer at Adviceworx. Now, we've touched on companies like Advotech and Mondi, which certainly appear to tick the boxes, but tell us about one that I actually haven't heard of before, Danaher. What do they do and why do they fit into our portfolio today?
So we've spoken about two local businesses, if I can call them that. Not that Mondi is exactly a local business, but so here, when we look at impact investing, so this isn't necessarily ESG type investing, but companies that make an impact on a global scale. You've got Danaher, which is a US listed business. It's got 4 divisions. 3 of them play to your medical industry, life sciences, diagnostics, and your dental divisions, and they obviously look at diagnostics of diseases, chronic diseases, treatments, testing drugs, and then supplying the dentistry industry. So that's from a healthcare point of view plays to that theme. From an investment side of it, if you think of their diagnostics, it's like the Gillette razor blade. You buy the Gillette, you buy the handheld razor blade, but then you've got to keep replacing it with the razors, which are actually the expensive part of the product. Similar to their diagnostics, you buy the your blood testing machines, then you've got to keep buying the supplies in order to test it. So it's a fantastic business model from that point of view. Then they've got their environmental and applied solutions division, and this plays to water scarcity, purifying water, filtering air. For instance, on Airbus aeroplanes, they filter all the air. They produce the systems that filter the air on every single Airbus that is produced. Purification of water. They build the technology and innovate around that. So it plays to the water scarcity theme as well. And then from an investment point of view, again, I think it's fairly valued. But again, you're paying up for what we believe is a high quality business that has strong cash generation, sustainable earnings through the cycle.
Indeed, so clearly one for us to consider, and we're on an international scale, so clearly we're also talking about a volumes game there, no doubt. Ecolab is another one that comes up on our list, and one would assume with a name like that, surely they're on the right track.
So again, this is in a similar vein to Danaher. They are water, hygiene and energy technology business that provides products and services around the world. Ecolab, I'm sure you've heard of it somewhere along the line. They operate in, I think, about 170 countries. Now, if you think that there's 196 countries in the world, I think it is. It's almost every single country they've got a presence in, and across 40 industries. So I'm sure we can't even name 40 industries sitting here, but they operate within 40 industries, whether it's from hospitals to hospitality to mining companies to manufacturing companies to dairy farms. They're everywhere, and they produce products to increase the efficiency of businesses, the safety, your energy, reduce your energy consumption. They play to water scarcity, again similar to Danaher, do water purification. They also do air filtration. So they're in every single industry that you can think of. Through the cycle, it's a very defensive business, because if you're improving companies' efficiencies, companies are going to be willing to pay up or pay a premium for those products, especially during times of economic downturn, when they want to try and improve their profitability. So from a sustainability point of view, it's a fantastic entry, into sustainable investing, given its wide array of businesses, plus, the impact that it has on the environment as a whole.
Interesting one to note there, and certainly going to consider adding into our portfolios. We've thrown in quite a few, but what about Tiger Brands? And maybe this is an outlier, right, Aileen? Because it seems as though it has been naughty.
Yes, this is my naughty corner for ESG. So we're all very familiar with Tiger Brands. They make some of the most respected brands in South Africa. So think about your Jungle Oats and Black Cat peanut butter, All Gold tomato sauce. So we're all very familiar with these brands. Unfortunately, Tiger Brands has run into trouble from an ESG perspective. So if we cast our minds back to 2007, they were fined nearly 100 million rand for colluding with other bread producers to fix the price of bread. Now, from a social perspective, that's not good for your low-income consumers who are very reliant on bread as a food source. Then 2014, they had to take off about thousands and thousands of instant-tastic rice because the colorant was found to be toxic to human beings. So that's obviously not a good outcome. And now we've had the listeria breakout, and nearly 200 people have died. Hundreds of people are very ill, and this has had a knock-on effect on Tiger Brands as a company, because they've had to close down 3 of their production plants. they've had to recall all of their products and also close an abattoir. So, you know, you're looking at a cost of about 370 million rand just related to that.
Sure.
And then there's a lawsuit that is being pursued as well on behalf of people who have lost family members. So we're looking at another 400 million rand in terms of a lawsuit. And then all the production facilities that have closed are obviously not producing, so they're losing income, and that's about 50 million rand a month.
Cool.
So far we're looking at, what, 800-900 million rand? But the broader question for us is around the reputation. And obviously we don't have a great track record here. We do respect the brands, but would you invest in this company? So fundamentally it's actually looking quite good. You know, it was trading at about 470 rand at the beginning of the year. It's down to about 325. So that's about a 30% loss had you been invested in Tiger Brands, which is a significant loss. And now you need to weigh up, so valuation-wise it looks quite interesting. But am I comfortable with the ethical and social issues that continue to emanate from this company? And as an investor, you need to weigh those two things up when you make an investment decision.
Tough elements to consider as well, as you've highlighted. Another one that also comes to mind is EOH. Now, many of us know this as a technology firm, so perhaps we're questioning, why is it in the naughty corner this time around?
All right, so some of the concerns around EOH have got to do with the G in ESG, so corporate governance, for example. And the problem with ESG, I mean, this was the darling of the JSE for many, many years. It was highly acquisitive. It grew its earnings in double digits, and it was a favorite among many investors. But the problem with a highly acquisitive business is you're acquiring lots of little different businesses, and it creates complexity in your business model. So you need strong board oversight on your acquisitions. And now there are allegations that bribery was used to secure some of these contracts. There are some questionable contracts with government, for example. And then obviously the director dealings in certain derivatives, which actually was not good for the share price. So the oversight by the board has been brought into question. And in terms of compliance with the King Code, there are issues around independence of their board members. A lot of them were actually previous employees of EOH and are now serving as independent board members, and one has to wonder just, well, how independent are they? So again, a company that's looking on a valuation perspective quite good, but then you would need to weigh up, well, am I comfortable with the corporate governance issues that are coming to bear at EOH?
I think it probably comes back to your earlier question about governance, and in South Africa in particular. And we all know, I suppose, what's happened over the past, call it a year now, going back, where South Africa was typically looked at, you know, as a very high quality from a corporate governance point of view, as a country as a whole. And we know what's happened with Steinhoff. We've had the Resilient Group. You know, there's been a lot of allegations around, you know, bribery, as Aileen mentioned, with EOH, amongst other companies. So I think corporate governance in South Africa at the moment is very much under the spotlight. It's not even the listed companies. We know a lot of the unlisted companies, big multinational accounting firms, if I can touch on that, you know, that are also under the spotlight. So I think corporate governance in particular, when it comes to South Africa, when you think of E, S and G, I think right now the G part of that equation is very much in focus and is probably the most important, you know, from an investment point of view going forward. I think hindsight's always perfect, and you know, if you're not having a ESG philosophy or process on its own, standalone, you would still include companies that might score low on it. You might just hold a smaller weight in it. With hindsight, people now point to the governance of Steinhoff and said you could have seen this coming a long time ago. So I think corporate governance now is very, very important from a South African investor point of view.
Very critical points that you've highlighted. I think just before we do wrap up, you both mentioned that, of course, the monitoring is quite critical in South Africa for retail investors who have conversations with some of their peers and financial advisors. How do we make sure that that monitoring does take place? What are the critical questions to ask, and who do we ask? Aileen?
So I think this comes to bear on the verification process and who should actually pay for that. Should companies be paying that as part of their annual kind of auditing costs? So there's a lot of debate happening around who should actually pay for that verification. But if this is something that you are interested in, then speak to your portfolio manager and ask them, well, on what basis have you selected these particular investments, or what basis have you selected this index. They need to go into the prospectus of that index and clearly understand the methodology, or otherwise, you know, as an investor, you can give your portfolio manager a very specific mandate, and then the burden would fall upon us, for example, to ensure that we comply with those ESG requirements. But it is certainly been debated about how this should be done, and I don't think that's been finalized yet, and that's what creates some of the difficulties with ESG investing.
I think very quickly, I know we're probably running out of time, but
Sure.
I think it also, you know, the onus lies on the investment manager to also actively engage with the companies around the ESG, I think, or ESG factors. I think that's a very important consideration. You can go and look at their annual report, or most companies have some sort of sustainability report that they put out. It's one thing just going and reading that and believing it, but you actually need to also engage with company management to ensure that they are actually, you know, what's on the can is actually in the can.
Indeed. Critical elements that we'll certainly consider, and of course calls for more interaction and participation from us as shareholders and investors. It's been another great episode of Portfolio Watch. Do be sure to keep in touch on the details listed on screen. But for myself, Gugulethu Mfuphi, and the team this evening, it's goodbye till next week.